India's insurance regulator, remember, has opened up a huge business opportunity for insurers. IRDAI recently enhanced personal accident cover to 15 lakh rupees from 1.2 lakh earlier. That's not all. The move was soon followed by a circular that made long-term motor insurance mandatory. Now, new car owners must pay a premium upfront for 3 years, bike owners for 5 years. This was the regulator's way of making sure premium payments continue and don't drop off after a year or two. Is this a big shot in the arm? Let's ask that to the management. Sanjay Datta, who's the Chief of Underwriting, Claims and Reinsurance at ICICI Lombard, with us on the show. Good having you, Mr. Datta. Thanks so much for taking in. To your mind, how big a
Same
positive...
Here. It's a pleasure to be on this.
No, pleasure having you. To your mind, how big a positive would this move be? We haven't seen something like this happen in the past.
This is a move driven towards penetration, so about 60-70% of the two-wheeler market in India, as of, the two-wheelers which ply on the road and do not have insurance. Now that's a very sorry state of affairs. We could blame it on a lot of people, but the fact is every vehicle on the road needs to have mandatory third-party insurance. Without that, any third party who gets injured because of the vehicle would not be in a position to get adequate and just compensation, which is delivered through the insurance route. Now, with that in mind, and with the Supreme Court judgment coming in, I think the regulator obviously set in motion a series of actions in a very fast pace, which allowed us to transition to a position where we were able to offer 5-year, third-party insurance for two-wheelers, along with a 5-year, damage, insurance cover for the vehicle, as well as 3-year long-term cover for private car, with an optional, cover of 1 or 3 year as a package for the motor car owners of new cars.
Okay, Mr. Datta, just a pointer. Whenever the skeptics were arguing about penetration levels of the insurance industry and would say that almost every car or every vehicle which is bought is insured, I think the piece that was being made by the optimists was that for how long do these policies last, and therefore is there a disguised dropout rate which the market is not factoring in. So therefore my question is, one, that whether the penetration goes up because of compulsory buying or no is one thing. Two, the fact that people will have to pay for 2 years, 3 years or 5 years upfront by itself changes the dynamics of the industry. Do you think that happens, or am I being a bit too over optimistic?
Yes, to an extent you are right. But there will be a change in the dynamics of the industry. Penetration definitely will go up. The consumers, of course, will have to adapt to a scenario where they have to pay upfront for these 3-year or 5-year covers for two-wheeler and private cars. But the point remains that there are two big aspects. One is they get a guarantee on the on the premiums for these 2, 3 or 5-year durations. B, their cover is there. They don't have to go through the hassle of ensuring that the cover happens. Sometimes distribution fails. Sometimes they're not. The customer himself or herself forgets to renew. That could put them at huge risk when they go on the road. And third, and the most important, is that overall, there is a whole sense of sanity on the roads, where every vehicle continues to be covered, and hence whenever there is a third-party incident, which is regrettable, but the point is that there is adequate compensation for all the victims.
Yeah, I mean, also I think the fact that the annual renewal costs, if any, that would have been there for a company like yours or any of the others would probably now go away, right? Because they have to take up front, and therefore that renewal cost doesn't come in. But yeah, more or less, just a broad trend perspective then, Mr. Datta, if this has happened, which is a big shot in the arm, I was talking to one of the owners of a health insurance company or an insurance firm, and he was saying that to his mind, health insurance was the biggest piece to be in if you're setting up business upfront, and that too is so underpenetrated. That probably benefits you as well. How do you think growth rates for you change over the course of the next 2 or 3 years, if they do?
See, so we are driven by what happens in the industry, as a company. So
True.
I would more comment on the industry. The industry growth rates have been, kind of, over 15% of the years, with health insurance and, long-term two-wheeler and four-wheeler insurance taking off. Obviously, the growth rates will sharpen a bit because, we would have much more coverage. But this factored in with the fact that with these premiums being in place, as an insurance company, we would be more in a position to go and look at the customer needs on various other angles. What the basic mandatory third-party insurance is in place now. As an industry, then we would have the wherewithal to go and concentrate on various other aspects of coverage which is not there. Look at some of the floods which have occurred. A lot of the economic damage to the actual insured damage is a woeful 5 to 10% at most times, which causes a lot of penury and catastrophic losses to people who suffer such losses. So those are the areas where penetration will improve now as with these particular areas become mandatory one, where the need for health insurance goes up. We should be able to deliver based on the platforms we set up.
Okay. Mr. Datta, one final word, because I understand you would not be in a position to give me exact numbers or too many forward-looking statements since you might be in a silent period. But just, we were having a conversation with IMD on Monday about rainfall being slightly deficit compared to what was the earlier belief. Now, FY18, that small concentration led to higher outlay for you as a company because of the concentration in MP. Now that we know that rainfall hasn't been up to the mark, is there a possibility of that number looking slightly higher than what would have been earlier envisaged at the start of the rainfall season, for you specifically?
Yeah. So, when you look at rainfall, when we're looking at tracking rainfall across the nation, so deficit, also plays out at different regions in different, ways. There are two types of deficit. One is an overall deficit, of rainfall over the, particular cropping season. Let's say Kharif for an example. There could be deficits at, certain phases of the, planting season. Sometimes deficit in the middle period is made up, towards a late burst in the, towards the end. Whatever we've observed so far is that the deficits have been in areas where, as of now, we're not too highly, exposed. Of course, the entire, the entire season has to play out in terms of the harvesting starting now. What will be an important factor is each crop has its own, signature in terms of how much, rainfall it needs towards the end of a particular phase. And that will play a big part in the way the deficit plays out. So, I mean, we've got a lot of things to watch for before we're able to comment on specifically what the deficit, which is an overall issue across the country, would mean company to company.
Okay. Well, you guys have been cautious. Let's see if the stance continues forward. Maybe some numbers post your earnings season, or post your numbers come out. But Mr. Datta, good having you. Appreciate you taking the time out and joining us today. Thanks for being with us.